It is often said that if you want to be a successful investor, you have to stand against the popular opinion. One person who has a record of doing exactly that is Michael Burry. He's a physician who left his medical career to start his own hedge fund. Okay, so what happened was back in 2008, Michael bet against the American housing market, the very market that nearly everyone was betting on. And effectively, he made his clients hundreds of millions of dollars through this short. Back then, Burry looked at the numbers and saw that the risk of investing in the housing market and mortgages were far higher than what most investors were accounting for, and he was right. Eventually, the housing market took a plunge, and Michael was on the right side of the trade. Okay. So today, Michael is also making a similar bet. He's betting one more time against the popular opinion. He has recently announced that he is selling the very hot stock that many investors are buying, Tesla. Just like in 2008, Burry is seeing a huge gap between the actual share price of the famous electric car company and the company's actual performance. A small benchmarking exercise would reveal that Tesla is actually behind most other large automakers in terms of production capacity currently and earnings per share, among other measures. Yet its market cap is about 5, 10, 20 times higher than its competitors. So the way Burry sees it is Tesla's fundamentals do not support such a high share price. He even went on and advised Elon Musk to issue more shares at the current price level to take advantage of the current market valuation, because Burry does not believe it's sustainable, the price. And even though the stock might seem overvalued to some speculators, this does not necessarily mean that it will start falling right away from where it is now. Investor sentiment around the stock has been positive for quite a while, and this upward movement was not entirely unfounded. Many factors have made 2020 a positive year for Tesla. I want to first go over Tesla's positives, what makes Tesla a great company, but then I want to go over the negatives and the reasons why Burry's shorting it. So, the first factor that's contributed to Tesla's growth is their deliveries. For instance, Tesla delivered over 139,000 vehicles to its customers in the third quarter of 2020. This is the highest number of units that Tesla has ever delivered in a single quarter. And for a market that is hungry for good news, this was more than enough. The stock price increased following this news. So Tesla's deliveries have been growing steadily over the years. However, they are still below the company's selling capacity. Tesla can make 690,000 units a year in total from all its factories worldwide, but its annual sales are still below 500,000. It must close this gap if it wants to make the most of its resources and increase efficiency. The second factor behind the rise in Tesla's stock price is that the company is now generating a quarterly profit consistently. Its financial performance has been improving gradually, and it is now closer to achieving the annual profitability goal. In 2019, Tesla's earnings before interest and tax were 80 million. Which is an impressive figure and the first positive EBIT, earnings before interest tax, annually. Third, and perhaps the most important factor, and I'm sure you guys are aware of this, Tesla has been recently added to the S&P 500. This is used as most analysts' benchmark to measure how American equities are doing. For many investors, this is a psychological milestone. It gives them a moral boost, especially given that the S&P 500 has had an extended uptrend that lasted for 10 years before the pandemic, and now it has recovered to reach new all-time record highs. For Tesla, being in the S&P 500 would mean that the stock has now become more valuable from a portfolio composition standpoint. It now results in its stock being bought automatically by passive investment funds that track the index. In other words, by joining the renowned index, Tesla has become a part of so many portfolios around the world that hold or track the S&P 500. Those three factors have helped the stock achieve unprecedented momentum. But the question is, how long will this last? Michael Burry, at least if you go by his short position on Tesla stock, he does not think that this momentum will last. And he's actually betting on this being a bubble and it popping. So what are the reasons? First of all, its sale of regulatory credits, not vehicles, has given it this push, this artificial push it needed to get closer to making a profit. For those who don't know, regulatory credits are units granted to companies by authorities to set a limit on how much carbon emissions they can let into the atmosphere. For a company like Tesla, which is 100% compliant, all of those credits can be sold since it does not use them. The sale of regulatory credits alone has brought to Tesla more than $500 million in 2019. They're a good source of revenue that Tesla has successfully tapped into. And by considering the revenue from selling those credits in previous years, Tesla has cumulatively earned over $1 billion thus far, all at zero cost. Another qualm that a lot of Tesla shorts have is that the demand for the vehicles, some of it at least, is artificial, because in many countries where electric vehicles are being sold, customers are benefiting from generous tax rebates. This means that a considerable part of the demand for electric vehicles is not driven by the customer's desire to purchase electric vehicles, but by incentives from the government. Now, this can be clearly seen in one of the biggest markets worldwide for electric vehicles, Norway. If you combine the subsidies that Tesla have received along with the tax rebates given to its customers, it shows that the success that Tesla has enjoyed comes partially, at least, from government policies, which some people at least are arguing that it's not sustainable. Another reason that the shorts have is that yes, the transportation sector is a big contributor to carbon emissions, and relying on electric cars would surely help reduce those emissions, there's no doubt about it. But this transition is taking place quite slowly, and it will take years, if not decades, to complete. It requires a change in infrastructure, and the economics need to make sense for both the consumers and the producers. It may be one story for the USA to get this infrastructure, but other countries around the world, it's not so easy or profitable. Electric vehicles, they existed even before fuel engine cars did, but they did not become popular because fuel-based cars were much cheaper to use, at least back then. For electric vehicles to become the norm, economic feasibility and efficiency is a must. It should not cost a lot of money for customers to buy and drive an electric vehicle, nor should it take so much time for them to find a charging station and fully charge the car. Progress needs to be made in those areas, and the question is, the progress has not been made yet, so why is the price so high? This is what Michael Burry is questioning. Aside from all of these other downsides, Tesla also has to deal with competition. This is one of the main things that is causing shorts to come into the market. You know, what can we say? News has surfaced that Apple, the deep-pocketed giant, is in the process of making its own electric car. Based on the reports, we would see an electric car from Apple in 2024. Apple's ability to make good software is not debatable. Moreover, even in the energy storage domain, the company does offer good lithium-ion batteries. Both of those capabilities make Apple a worthy contender for Tesla. But Apple is just one small potential competitor. You've got big German automakers. They're also working on producing their own electric vehicles from scratch, instead of trying to adjust their older fuel-based models. All of these companies are far superior to Tesla in terms of production capacity, and you can also argue engineering prowess. So Michael Burry is not entirely out of touch with reality when he said that the price of Tesla's stock is too high. Yes, Tesla have done well over the years. They're the leading electric car manufacturing company, that's for sure. They're the leaders in renewable energy. But are they really worth over $800 billion, which it's currently valued at? Is it really worth 20 times the amount of Ford's valuation? Michael Burry certainly doesn't think so, and I've outlined some of the key reasons why he shorted it. But the main one is the price. That's the question that every investor wants to know. Does Tesla justify its price? Michael Burry doesn't think so. other investors do, well, you make up your mind on whether you think they do or not.